Hey, everybody, welcome to the Social Distance Show. My name is Ben Barber. I am your host. This is the show that I really wish would have ended like the day after I started it. I've said that at the beginning and end of every show that I wish that this was the last episode. It does not look like it's going to be for a very long time. And that means that a lot of us are going to need help. Um, Small businesses everywhere are struggling. People who work for small businesses are struggling. People who work for big businesses are struggling. And a lot of people have a lot of questions. The government just passed a stimulus package that is meant to help a lot of people and a lot of small businesses, especially small businesses. And a lot of people have a lot of questions. And tonight we are talking to my good friend Nick Harrison, who is a corporate attorney who knows a lot about the CARES Act, and he's here to talk to us about it. So he's also here to answer your questions. He put out a Facebook post, I think yesterday or the day before, offering to help people who had questions about this, and he got a ton of response, and he wanted to come on the show, and I'm so excited to have him. Hopefully this is going to help a lot of people. So don't be afraid to ask your questions in the comments below, and then I'm going to actually give you the information to contact Nick yourself if you want to. So here he is, Nick Harrison. Hey Nick, how are you?
Ben, how are you? How's things?
I'm really good. How are you?
Well, it's going. I mean, the quarantine has been interesting, but it's going.
And you have a new baby, newish baby. How old is how old is your child now? I don't even really remember this. Is it?
She is just over 19 months, so it's getting big quick. It goes way too quick, way too quick.
That is so fast. I wasn't even sure she was a year yet.
Yeah,
That's crazy.
It's going by quick. I feel like we just celebrated her first birthday, and now she's timely child here. She's learning how to say no and all those other fun words as we're stuck in the house for this many hours. So
she's learning how to say no, and she'll never, ever, ever stop.
Oh yeah, climbing for everything. It's great. So it's been a while. I think I haven't seen you since our trivia days.
Yeah, it has been a while. And you've been doing a lot of stuff, and right now you're here to answer people's questions about the CARES Act. So you have a little bit of a presentation here, and you're going to loosely talk about it, and then you're going to answer questions. So if people have questions, feel free to leave them in the comments, and Nick will answer them the best that he can. And if he doesn't have the answer, he'll find the answer for you. So
absolutely,
take it away, Nick.
And I think you kind of started it. I heard your intro a bit. So I had posted a message to my Facebook friends, which then got about 50 shares in a couple hours, which maybe I'm just not that interesting, but nothing's ever done that before on my Facebook. And I started getting a lot of questions from everywhere, from not even just local businesses here, from South Carolina, from Ohio, from all over the area, friends of friends. I was talking to, kind of just self-employed people. I was talking to smaller businesses. I have a ton of friends in the restaurant business around town, either owning restaurants or working for restaurants and bars. So I got to thinking, and that's when I called you and I said, Ben, what if we use this as a platform to get some information out there? So I appreciate your help in getting this message. I hope it helps. What I was hearing is a lot of confusion from business owners about what to do next and where to go, and just even simple things like where is the loan application and where is the program application? Where can I get that information? So what I did is I was doing already the last few days. I mean, this is only a week old, CARES Act, that is. It's only a week old, but I had been doing research on kind of the larger company perspective, dealing with Social Security tax deferments. And when I saw this outreach for local businesses, I really wanted to pinpoint two programs that are out there for businesses to take advantage of. And that's the Paycheck Protection Program, which you've been hearing all over the news. It goes by PPP. And the other piece are these emergency disaster loans through the SBA as well. They're called EIDLs. So there are two programs. I wanted to run through both. We can, I guess, take questions as we go. Is that how we want to do it?
Yeah, we have a question now. If you want to get to it, or do you want to do a little bit of an overview first?
Sure. I am married, if that's the question.
It is not. It is business
okay,
related.
Okay.
So you want me to just go with the question?
Sure.
Okay. This is from Barbara, and you can see it on your screen, Nick.
Hi, Barbara.
Hi, Nick. Here's a question. Bill may have to stop working if Gina shuts down the state. Is it okay to apply for the PPP, even though we're not sure at this point?
So we'll go through some of the qualifications. So the qualifications are actually pretty loose, and it's really a standard of, is your business affected? Okay, so again, we'll go through some of these, but it's pretty loose standards. Now, if you're going about your day and your business isn't really affected just yet, we can talk about that. And I know Barbara pretty well, so we can talk about that when the appropriate time is. Now, one important piece under the PPP is there is a pot of money here that is allocated under this legislation. I think it was $349 billion. They're already talking about expanding this, and I've heard numbers upwards of $1 trillion. I mean, my personal opinion, I don't think if there's an overwhelming demand of this, I don't know how they could stop businesses, let's say in a week, from continuing to. That just doesn't seem like that would be fair, and I don't think they would do that.
Right.
But at least on its face, it is for first come, first serve, if you will.
Okay. So, well, if you have more questions, send them in. While we do that, let's talk about the programs a little bit, and I'll go over to the PowerPoint. Yeah,
go ahead and select down. So there's a few SBA funding options, and the first two that I mentioned are the ones I want to talk about. We're going to go through the PPP pretty in depth because I have heard and I'm anticipating a lot of questions on that from businesses. So let's go to the EIDL real quick. So this is a pretty simple explanation. If you want to click to slide 3 here. So if you're in business and you've worked with the SBA before, there has been this concept of these loans, and they're out there. But under this program, there is a provision where you can get essentially a $10,000 grant. Okay, and this is for any small business owners, sole proprietors, independent contractors, self-employed folks. I quite frankly have been getting a lot of questions from those that are self-employed. So if you're experiencing that temporary loss of revenue due to the COVID-19, you can apply to this EIDL, and you're going to get an advance of $10,000. Now, they're saying that this will be funded in your account within 3 days.
Oh, wow.
I keep hearing that there's some issues, but they're still holding to 3 days. So it's a quick process. One other piece that I've heard is when you fill out your application, so typically these loans have, certain interest rates, certain maturity terms, sometimes upwards of 30 years. And I think you can get up to maybe $2 million under these loans. The first 10,000 is what we're talking about here. And that's the piece that is essentially a grant. So if you are accepted under this program, you can get up to $10,000 as a grant, meaning this money doesn't have to be repaid. Okay, so this is critical to some of the businesses around here. This is an amazing opportunity to get some help in, and to get some help in very quickly. So to answer kind of Barbara's question, this might be one option very quickly. If you start seeing that temporary loss, okay, then you can apply for this program, and we can discuss the paycheck thing here in a minute. So,
sure.
And if you just want to flip to the next slide here. So I just took a screen grab of, and I'm sorry, it's probably really small and I can't even see that. One back. All right, so this is just a snapshot. The loan process, it's pretty simple. And again, the requirements are are shockingly loose. I mean, they have really pulled out a lot of the stops on these programs. Now, still, let me just back up a second. Be very careful. In both of these programs, you want to obviously make sure you're providing truthful information, document your expenses, keep records, okay? Because they're acting very quickly right now, and that's why you've got some of these loose restrictions. They're really trying to pull out all the stops, but you don't want to create a reason for them to ask questions after or look at how you're using that money. So make sure.
Right. I mean, a lot of this has to be in good faith, up front. In an order to act quickly. So that's a very good point, Nick.
Absolutely. So this is pretty self-explanatory, the process. Again, I'm going to reiterate, I have heard several situations. This is on the EIDL now. Make sure you check the box that says grant, okay? So make sure you check that box on there. Otherwise, this could go into the larger kind of general bucket of that EIDL, and you don't want to accidentally get this and then unexpectedly have to pay this back. Okay, this you want it to fall under the grant piece.
Speaking of, Frank has a question. He says, if you take the loan, you can't lay anyone off, right?
So this is where we're getting with under the PPP program. Okay, so the PPP program is that incentive-based program where what the government is trying to do is to make you keep your staff as is intact for the next 8 weeks. Okay, that's what they're looking to do. So if we want, Ben, we'll jump right to slide 5. So this is what's all over the news. This is what the participant is asking. So this is called. Yep, you're there. Okay.
Yep.
So this is the PPP program. I'll go over a quick overview. I'll go over some of the terms of the program. So this is the program where they're going to forgive the payroll and certain other expenses for the next 8 weeks. So the 8 weeks start. So if you're approved for the program, you're going to get 8 weeks from the time that loan starts to cover. A majority of it is going to be payroll. There's other rent and mortgage interests and utility payments. I'll go into more depth there as well. As part of this program, Ben, you were making this point, they somewhat of a good faith. They're in these programs, they're not doing any sort of credit checks or really background checks. They're basing this off of the business owner's representations and certifications. Again, let me reiterate, you don't want to be lying to the feds, okay? That's probably a no-no, okay? So in this loan program, you're going to certify that the loan's necessary to support the ongoing operations. Barbara, this is where your question comes in. So if it's not a problem, you're going to have a difficult time certifying that it is. So that the funds will be used to retain employees and maintain those payroll and mortgage payments and other utility payments that qualify. And then that there's no other program that's been received or that you're not duplicating the application. So, really what yes, I love that. Bottom, don't lie to the feds. Don't lie to the feds. That's bad. My next bullet here is how are they really distributing this money? So just an overview. It's going through the traditional SBA process, but it's even larger than that. So they're getting any essentially federally insured banking institution or credit union in on this. So the first step I would do is, you all have banking accounts for your businesses. I would call up the bank that you use and just find out, call them up Monday morning. You can even check their website. I wouldn't be very surprised if on their homepage they have links to this program. And they'll tell you whether or not they're participating. Last I heard, there were more than 1,600 banks. I think it's going to go even higher. I've also heard that the SBA, they have not done this yet. I keep looking. I just looked before I got on here. They're going to be providing kind of a locate your local bank on the website. so that you'll put in your zip code, put in your town, and they'll tell you where to go. All right. And then my last point there is they're 100% backed and guaranteed by the SBA. So we'll go to the next one. I'll just explain some of the terms of the PPP. So I think I may have mentioned this. The real aim of this program is to retain the payroll. And the way that they're doing this is they're using your payroll numbers, your payroll costs, and we'll go through how you calculate that. And they're basically saying your max loan amount is 250%, or take that amount, times it by 2.5%, okay? And what they're saying is if you do the math, 8 weeks of payroll, right? That's kind of your two. There's an added bit of money there that's going to be allocated for these other expenses, these other business expenses. And they're fine with you using it for that money. But the whole point of this is for you to keep your staff and to keep them employed. So they're requiring that 75% of the amount is going to those payroll costs, okay? The maximum loan here is capped at $10 million. I know many of you won't touch that, but I figured I'd put that in there anyway. The first 6 months of principal and interest are automatically deferred. Now, as you've heard on the news, let's think about this, right? This is essentially going to be a grant if you follow the rules and you play by the rules. So by them deferring these principal and interest payments for 6 months, this is essentially a program that you don't have to worry about if you follow the rules. You don't have to worry about making the principal and interest payments because it's all going to go away once you follow the rules. Now, we're going to go through how the amounts can be reduced that are forgiven. And if, let's say you had to, a few employees didn't come back, or you're, forced into certain situations, then you would be subject to this interest rate of 1%. You'd have a maturity term of 2 years on that loan, and you would have to pay that in, ordinary course. So, regardless, this is a pretty amazing program. And my note last there is on the reductions. We'll get into that as we go. I'll pause there because I know lawyers can talk a lot. And
Glenn Ambrose says, this is great info. Thank you. Barbara says, thanks, Nick. She also says Washington Trust Co. has info and links on their website, which is great. Brian has a question. He says, what about seasonal businesses where your payroll has doubled since last year?
So the way we're going to go through some of the calculations, so they look back over a 12-month period. And some of the other ways that they compare this is to determine whether there's differences is they'll say, what was your quarter in 2019, right? So we're not trying to compare July with February if you're a beach business, okay?
Right.
So there's ways in the calculation that you can kind of sort this out.
Is that because this program right now is trying to cover right now?
So it is for this period. So what they'll do is they'll look at, so there's to determine your payroll cost, there's a look back of 12 months. Okay. So we're going to look back and we'll determine kind of your average monthly cost. So it gets kind of rolled in there. Now, Brian asked a very good question. Is there a situation where I can imagine a situation where you might have an issue where your business has grown at such a rate and the timing might just be perfect, where you might not get as much as you would have otherwise if this happened at a different time. Does that make sense?
Yeah, like if you your your income 12 months ago isn't anywhere near what your income for the last 3 or 4 months has been, then that's not going to be a great look for you when they do a 12-month look back and they're trying to look at, April, May.
And two, if your business, so we could probably come up with, we're going to have to get some beverages maybe to come up with all the various, but he brings up a good point. There is a scenario that you could create where you might not get as much as you thought you would because of growth and because of time periods and all of that. But I'm gonna actually go through how you calculate the payroll costs.
Sure.
And we've got a couple examples later on that we'll go through as well.
Okay. Do you want to go to the next slide?
Sure.
This is eligibility to participate in PPP.
All right. I was curious how many viewers we had. All right. So eligibility in PPP, say that 20 times fast. So essentially, you're a small business. There are inclusions for tax-exempt nonprofits, for veteran organizations, for certain tribal businesses. But essentially, the takeaway here is small business, less than 500 employees. You're in operation on February 15th of this year, and you're paying people salaries, right? So you have payroll taxes. Essentially, what they're trying to determine here is this is focused on small business, A, and B, they want to make sure that you just didn't start this business last week and then suddenly you think you're going to get a bunch of capital in. That defeats the purpose of the entire program. So hopefully that makes sense. Now, big one here, Ben, I've been getting a ton of questions on this. So point number 2, starting April 10th. So the small business, the point number 1 started on Friday, okay? I've heard of flood of people. Get these in. But I've had a ton of questions about those self-employed people out there. And number 2 is critical. So starting April 10th. So what is that? This Friday? So yes. This Friday, An individual who is acting as a sole proprietor, independent contractor, or eligible self-employed individual, again, in operation by February 15th, you are going to be able to be eligible for this program as well. One note, so if you're a small business and you have independent contractors that might be being paid through your business, the independent contractor is essentially their own applicant, okay? So for the purposes of payroll costs, you're going to include your employees, not those independent contractors, all right? And then there's just some really small writing, because I'm a lawyer. But particularly for the self-employed pieces, they're gonna be asking for information about things like your 1099. So have that information available. Okay. So we'll go to the next one here.
We have a question actually. Unless you want to go to the next one first, Nick.
You're breaking up a little bit, Ben.
Oh, we have a question as well. If you will, let's do this first, and then we'll go to the next question. The non-eligible.
Yes. So, couple of big ones here. So, if you're engaged in illegal activity, go figure. The feds are not going to give you money to commit crimes. Seems pretty obvious. You cannot be a household employer. Yes, do not lie to the feds. Don't do illegal things and ask them money to fund your business. Probably not good if you're trying to keep things, on the hush hush here. The second point, if you're a household employer, so if you had nannies, housekeeper, someone that you're hiring in the home, that does not apply. There's a requirement of if an owner who owns 20%. If they have been convicted of a felony within the last 5 years. And also the last one is if you're currently, delinquent or basically cause any loss to the government here, you're going to have an issue with this program, but hopefully a majority of our small businesses are well outside of this.
Right.
All right. Did you say we had
okay.
questions?
Yeah, we have actually 3 questions right now, so I'm just going to go in order. Although I'm going to skip Kevin James, why does the cage bird sing? Hilarious joke, though. Daniel Perrin said, I started my mobile detailing business in the fall. Since this happened, 90% of my work is canceled. I ended up going back to my old job. Do you think, if there's more to that question, it got cut off. So Yeah, so he started his mobile detailing business in the fall, and then and then the last month or so, 90% of his work is canceled. He had to end up going back to his old job. So if he is now working for his old job, is he eligible for this? And also, most of his business, if he just started in the fall, he doesn't have that full year look back.
Yeah.
However, he was in business February 15th.
Yeah. So again, remember the two programs. So there's the emergency loan program, and then there's the PPP. So there's two possibilities. And what I would do is kind of walk through some of these qualifications. So I think where his question was probably leading is for certain qualifications under unemployment. So with his business that he started, that now 90% of it has unfortunately gone away because of the virus. Because he's now employed and potentially fully employed, he might not have been eligible for unemployment. This is a whole different beast, right? This is to retain our businesses. So what I would say is look at your business and walk through these criteria that we have. And again, I'm going to provide my information too. If there's these very specific situations where when you walk through that criteria, if you still have questions, shoot me a line and I'll try to answer it the best I can. Okay, but keep that in mind. It's not about the employment, like the analysis under an unemployment situation. This is truly for the business.
Our next question, and I'm going to pull that up for just a second so that we don't lose you, Nick, in the question. Glenn says, I missed the beginning, so I can go back and watch this if this was already covered. The question is, for a sole proprietorship where you are the only employee and only a portion of my income has been lost, can I get minimal assistance in the form of a grant? Or does my income have to have been dramatically affected?
So again, the conditions are pretty loose. And under that, and by the way, Glenn, we're going to make, Ben, correct me if I'm wrong, you can watch this back, right?
Yeah. Yep.
You can watch this program. Okay. We'll put you to sleep. so you can watch it, but we discussed some of the loose requirements. There's not an element on that emergency loan. It's really loose requirements. It doesn't say that you have to lose 90% of your business. You don't have to lose it all. You just have to be really affected by this COVID-19 situation. And then on the PPP piece, we've got that component coming in next Friday that can also apply as well. Okay.
Awesome. Frank DeCaro has another question. Are S Corp with 2 employees and no sub? So do an S Corp with 2 employees and no subs qualify? He is a small HVAC business.
Yeah, it should. So again, so yes, again, if you're going through those qualifications and you're checking all those boxes, yes, I think what's maybe throwing people off on this is how little red tape there is on this. Right. I truly believe that is the most confusing element of this, is they've almost made it so simple that we're all sitting here going, but wait, there's got to be more, right? Where is the lawyer's fine print? But it's a pretty loose program. Okay. Again, don't lie to the feds.
Right. I'll put up the banner one more time. So in a situation like Glenn, you're probably looking for the not the PPP because it's not your payroll. If you're a sole proprietor, and however, April 10th, you can do that. Well, but is that only if you pay payroll taxes to yourself?
So it depends, because as an S Corp, he's probably paying salaries for the employees. So
sorry, that's Frank. So yes, I think Frank would definitely be able to do PPP. But Glenn was the sole proprietor where he's the only employee.
Yeah, so under so you could do both, right? We can do both programs. They're allowing you to do both. Under the PPP for that person, you're going to have to do wait till the April 10th, okay? But for the S Corp situation, on the S Corp, you're probably paying some sort of salary or wage in there, given the structure of that entity. So you should otherwise fall into this PPP bucket, as well as potentially taking advantage of that emergency loan situation as well. Okay.
Awesome.
And
By the
that
way,
is a business that would certainly, I mean, if people aren't wanting you to come in their homes, right?
right. Yeah.
And quite frankly, I keep hearing questions, does this stuff go through? So you can see where the fear would potentially interfere with that business. And frankly, I mean, you can see it if you're running a business, you can see the decline without, scientific analysis here.
Derek says, hey, Nick, to ensure compliance with loan forgiveness of PPP, should we rehire the guys we've laid off, or should they remain on unemployment until we have enough work to keep them busy? If so, any length of time restrictions as to when they would need to be rehired? Thanks. Thank you, Derek.
Great question, Derek. And it's been a while. I got to catch up with Derek. Back to our soccer days when I was about 100 pounds lighter. So under this program, you want to bring those employees back, okay? So you want to bring those employees back. There's a specific situation that I'll be talking about here in a minute with restaurants and waitresses and waiters and bar staff that I think is relatively interesting. But Derek, yes, you want to bring these people back. You want to put them on your payroll. That doesn't mean that you have to have work for them, okay? That's not the point. The point of the program is not to magically have work appear or a requirement that they must stay busy. The point is they want you to keep them on the payroll so that we are ready to go when this virus, is behind us. And also think about what we're balancing here. I mean, the government's trying to balance this program and your unemployment benefits, right? And I think the calculus that they're making is I'd much rather pay through the businesses, keep these businesses afloat, keep their staffs so that we're ready to go and we get that V shape when we go. So no, there's no requirement that they have to, actually be doing a job. Just bring them back, okay? Bring them back. Another very interesting discussion is how do you, with some of these unemployment additional benefits, this is one question that's out there. The employer is going to essentially get dinged on the reimbursement of these loans or the forgiveness level of these loans. How do you balance that with these additional 600 amounts in unemployment? So that is a very deep conversation, and it's going to depend on everyone's circumstance, but an interesting dynamic between the two programs.
Absolutely. Let's move on to the next slide. I can't believe we've already been talking for a half hour. Do me a favor, leave a comment if you think that Nick should have his own show where he just talks about this stuff. By the way, Glenn says this is one of the most helpful streams I've seen. Nick is extremely knowledgeable, talks in straightforward, easy to understand ways.
Thank
really
you.
Impressive. Thank you. Frank says my exact thoughts. Yeah.
Thank you.
Nick, if you want your own show, you got it, man. Nick and
I was thinking of a name if we did do this because you got my brain going the other day.
Good.
Cocktails with Counsel. What do you think?
Cocktails with Counsel? I love it. Let's do it.
All right.
It's a
All
thing.
right. So let's get into payroll costs.
Yes.
Because this is an interesting one, and this is where the bar staff, restaurant staff, I think, for all my friends out there, this is big. So I'm not going to go through every line. You can kind of read these. I want to hit on one major point. So payroll costs, what does that include? It's essentially everything that's related to the offer of employment, right? The salaries, the wages, the commissions, and the cash tips. Okay, hold that for a second. Cash tips. Okay, all the vacation, pay for family medical, sick leave, and all of that is all included. So when you're calculating that, make sure you're adding all of that up, okay? For the independent contractors and sole proprietors, you're going to, again, be looking at those wages, commissions, incomes, and net earnings from self-employment or other compensation. Now, this gets a little interesting with paperwork and how your various businesses, you might be doing things. But let's go back to this cash tip thing. So one of the first questions I heard on this is, I have a restaurant. How in the world am I going to keep my waitresses and waiters and bar staff interested in staying when they can go collect unemployment and take the additional 600 on the federal level. And this kind of brings it all together for me. So when you're calculating your wait staff and your bartenders, you're not only taking that wage, which we know is small, you're adding the tips, including cash tips. And what they say under this is use what you have for documentation, okay? And this is where I'm reading between the lines. So if you have the credit receipt of tips and you have that amount, the government is essentially acknowledging the fact that we have this concept of cash tips that might not be incorporated in that amount, and that the business owner should essentially make a reasonable, good faith estimate of the tips, of the amount. Back to our rule, Ben, you don't lie to the feds, don't get yourself in trouble, but be fair to your employees, right? Come up with a reasonable estimate of what their wages are. Now, we want to be careful here. We want to help in this situation. We want to make sure that everyone's taken care of. Can I promise that the government isn't going to ask you a question in 6 months about why you said Sally was making $27 an hour and only claiming 15?
Right.
You know what I mean?
Yeah.
Okay.
They
But
could
the government's
ask questions later.
things, right?
Yeah.
So
So make a reasonable, good sense estimated judgment of tips.
So it's an interesting, and it levels the playing field of the wages for wait staff. So that's your payroll costs. Let's go to the next one. So things that aren't included in payroll costs. Okay. So any compensation for employee that doesn't have a principal resident outside of the U.S., any compensation in excess of 100,000. Remember, compensation, we're including all of that. So retirement, all of that, wages, tips. Okay, it's not just the salary line. Essentially, your FICA and qualified sick and family leave. And we'll get to our calculations is the next slide, Ben. So if you want to go to that one, I'll show you kind of how this all works.
Sure.
So a couple of examples here, and I apologize that it's so small. So the first example here on the left in the blue. So you have no employees that make more than $100,000. Your annual payroll is $120,000. I love this because clearly a lawyer wrote these equations at the FBA. It's so easy. Lawyers are terrible at math. So your annual payroll is $120,000. Your average monthly payroll, divide that by 12, is $10,000. Now remember, the maximum loan amount is 250%. So you're multiplying that by 2.5 times. That gives you the $25,000 maximum loan amount. Okay. Let's add some interesting elements here. Example 2, you have some employees making more than $100,000 when you're doing that calculation. Your annual payroll is $1.5 million. And when you subtract all the plus 100 compensation amounts, you come down to $1.2 million in your payroll. So your average monthly qualifying payroll is going to be that $100,000. Again, multiply that by 2.5, and you get $250,000. Now, the last example here is the same situation as one, except you're taking advantage of that other program, that EIDL loan of $10,000. So your maximum loan there is going to be $35,000 under this program. Okay. All right. So there is some math involved, but I was trying to break this down in hopefully a way where people can understand it and then go back to their books and try to apply those principles. So we'll go to the next one, loan forgiveness. So loan forgiveness. So the period you're going to hear, if you hear this on the news, if you see this on websites, you're going to hear about the covered period. So this covered period is February 15th through June 30th. Okay. So what's going to be forgiven? Those payroll costs, everything we discussed, And remember, 75% of it has to go towards those payroll costs. This is where it gets a little interesting, but I think it makes sense when you stop for a second and think about it. Rent obligated under a lease in effect before February 15th, and then those utility costs before that February 15th date. Why? Because that's kind of when everything was going down. They're not paying for the new DirecTV subscription you decided to sign up to 3 weeks ago for 50 TVs, okay?
Right.
They're trying to take you back before the crisis and let you bridge this period of crisis, okay? So they're not going to let you go buy new things under it, but they'll pay what you were doing before.
As long as it. So just to clarify your wording there verbally, because your wording on the PowerPoint is correct, but your wording verbally was a little confusing just because you didn't include the word began. So the utility costs for services that began before February 15th. So they will cover the utility costs right now, as long as it's like an electric bill or whatever that began before February 15th.
Yeah, so the rent and the utility costs, the whole premise behind this is we'll pay the amounts through the February 15th and the 6/30, okay, for the rent and utilities that you had already going before February 15th.
Right.
Okay. So again, if you decided, I don't know, to put out a big concert venue in the back of your building or something, and suddenly you're racking up a new electric bill or something, or the DirecTV example, or any sort of situation like that, that's not going to be included, okay? Or additional rent space. It's really to bridge this gap. So they're taking a snapshot of, we're kind of looking at your business before here. You didn't know this was going to happen. So we're kind of trusting the truth in that period of time, if you will. All right. Absolutely. And then the last point, forgiven loans, not subject to tax, which is shocking whenever you hear that something's not subject to tax. So that's good. All right.
Absolutely.
This is where we get into the loan forgiveness and what could potentially be reduced. What does that mean? It means the amounts that would then click over until essentially a regular loan at that low interest rate. So you borrow $100,000, you lose a couple people, and the math says you now owe $10,000 of that $100,000. It would click to the payment terms we discussed: maturity rate of 2 years, interest of 1%. So how can that happen? Okay, how do I make sure that I don't have to pay anything back? Two things: you look at your employee count, okay, and your wage reduction. So the math problem here is essentially they're looking at the 8-week period, and they're trying to apply that average based on 2 periods. So either the period, and Brian, this might, depending on where your business is at, they're looking either at the period from last year, okay? So putting your business kind of in a similar situation so it's not a seasonal question, or they're saying the 2 months of beginning of the year, okay? So either your business is leading up and that's your period, or we'll apply and use the covered period from last year during the same time frame. So if you were a seasonal business, you'd be applying apple to apples essentially, okay? And if you're not, then you can use this beneficial period of January and February. Okay, so this is just to determine, I had this many, I now have this many. Okay, I've kept my burden of the staff. The loan is forgiven. Okay, the second piece is the wage reduction, and essentially it's going to be a proportional adjustment based on your loan. So the loan was intended primarily to keep your payroll, and if you're not doing that, they're going to reduce the amount that can be forgiven. Okay. All right. And then the last one. So another bit of question I kept getting is, first of all, where can I get the information? And then where is the application? So for both of these programs, and I'm happy to share this, Ben, you can, or shoot me an email. Just click on the link. So the SBA has some really great materials. ADP has some really great materials. There's even some law firms out there that if you just Google, they have some great materials. But the SBA, I'd really start there. And then I've given you the links to the actual applications to both that emergency loan and to the PPP program. Remember, on your loan, check the grant box. Check the grant box. I don't want you to have to pay that money back.
Absolutely. So we have a couple more questions, and then we'll get you out of it. This has flown by, and I would keep going all night if I didn't have Al Copley from Roomful of Blues, like probably trying to sign on right now for the next show.
Problem.
Nick, I own a lawn and landscape business. I have had several large landscaping projects canceled and lawn maintenance contracts canceled due to COVID-19. Can I apply for both? Any consequences? Are there any consequences to applying for both?
So if they're two businesses, remember this is based on the business level. So there could be some complications with how your business is structured. But if you have two companies, okay, so I know Brian quite well, so maybe we can chat about his personal situation on that. But it's just how it's arranged, really. It's going to depend.
But can one business apply for both or no?
One business. So, one business for the loan and for the PPP?
Yeah.
Yes. The answer is you should, really. You should really look into doing both. And then you could see in our calculations how that emergency loan comes into factor on your max out of your loan. But yes, you can absolutely do both programs.
Vincent says, so Nick, if we retain our employees and only use the loan for payroll, are they going to forgive those payroll dollars on the loan? That seems like the catch. Will they do it? If not, unemployment seems like a better option for the employer versus the risk of the loan.
So can you put that up one more time?
Yeah.
If we retain our employees and only use the loan for payroll,
are they going to forgive the payroll dollars?
Yes. So long as you in theory, they're allowing you to take a little bit extra, right? The 250% versus 200% of your average payroll to apply to those utilities and other expenses. You could just take an amount for the payroll dollars and move on. The benefit of doing this, okay, is you get to retain your staff, you get to keep them employed, and they're ready to go when this thing turns around. Yes. There's other benefits here than just, it's $15 versus $14 or something like that. So your business, the point of this is to keep people employed. The point of this is to keep business ready to go.
Glenn Ambrose says, I'd love to have a copy of the PowerPoint, please. Sent. I already sent it to you. Mary Bellinger says, thou shalt not pen a lie, or thou shalt dwell in the peg. Yes. Frank Takaro said, I just did the numbers for my situation after the payroll tax, workers' comp, insurance, etc., and it appears to make more sense to have the guys collect, and when this blows over, they would go back on the books.
And that might be the case, right? Again, there's other elements to this. Again, having your business ready to go. It just depends. Everyone's got to make their own decision, right? My biggest concern is making sure that small businesses are aware of these programs and how to take advantage of these. But I mean, he's right. I mean, there could be a situation where that makes sense.
Facebook user who is doesn't want to give their info says, awesome. I don't have a business, but wow, great information. Bobby says, great info, Nick.
That's weird. That lady has my daughter in the picture. That's very weird.
Interesting. Barbara says, thanks so very much, Nick. This has been most helpful. You are indeed a great speaker. And Glenn says, you rock.
Awesome.
So yeah, man, you're welcome on the show anytime, or like, let's do cocktails with counsel. I love it.
Good. Sounds good.
So, we'll talk off air and we'll announce something about that soon. And if you have more questions, as the scroll says at the bottom, just let me know and send a message, or if you know Nick, just send him a message directly. All I'm going to do is link the two of you up, and I'll also send you a PowerPoint.
Yeah, absolutely. Absolutely. And for those wondering, yes, those are real law books.
I love it.
This has been really fun, and I hope to help some of the businesses around town and frankly anywhere. This is
can you clarify? Can you clarify? You're not looking for anything out of this.
No. So no, my situation. I'm actually one of the 10 million that unfortunately lost their role. I worked for kind of big business, big corporations. I was interim general counsel for a little while, and unfortunately the Corona counselor. I love that. The COVID-19 hit, and here I am. So I'm going to take a few months off, figure out what's next. I'm just fascinated by business. I'm fascinated with all of this, and I was doing some work on CARES anyway. So I figured, why not help some friends and local businesses that I like to go to a lot. I don't want the town to look much different when we get through with this.
That's the goal, man. Brian asked also if he can get it. And Frank. Yep, absolutely. Frank, I will send it to you. Brian, I'll leave that to Nick, since you guys know each other. And finally, our last word for the night, because Al Copley's probably mad as hell at me right now. Don't lie to the feds, as Nick said. But there's a lot of great info in here, and thank you so much, Nick. I will talk to you soon.
Stay safe. And by the way, thank you all those medical staff, nurses, doctors, and everyone working in the grocery stores. Awesome job. Thank you, everyone.
Thanks, Nick. We'll see you soon. You'll be back. And thank you, everybody, for watching. This has been a wonderful, wonderful show. Our show usually goes about 25, 30 minutes, but this one was well worth the extra time. Nick is a wealth of information, and he will be back, and probably, look out for his show, because it's probably going to come extremely fast. All right, literally in 8 minutes, Ask Caswell will be back. Thank you, Frank. Ask Caswell will be on at 8 o'clock with Al Copley, Grammy-nominated music legend Al Copley, co-founder of Roomful of Blues. Have a good night, and stay safe.